Hey everyone, this is DayTraderRockStar, and this is the HPS video high probability watch list for the week of July 7th. And we're closing up a shortened week, day before 4th of July, so July 3rd, Thursday, half a day. And this whole week has been extremely bullish, and we ended the day on a very bullish note. We ended at the highs of the session, breaking out all-time highs on the Dow and on the S&P. And this is what you expect on a light volume holiday session like this. A half a day, this is what you wanted to see. This is what I was expecting, and we got it. So the market here does not give us any reason to sell off, and I'm not expecting any big sell-offs other than the standard pullback we've been seeing as this rally and this bull market continue. You can see a very organized trade here, and what this represents is an organized, controlled market. This is what the Fed wants. This is what everyone wants. You might be mad about it, you know. If you're a hater of this market, then you're probably missing out on a lot of good opportunities. So just remember this, you know, the market's always right. We do look for these opportunities on the pullback, and I'll welcome one, but I just have to remind you that it doesn't mean it's the end of the world if we do get a pullback. I would trade it just like any other pullback and expect it to run its course, and then we actually move higher. And I expect this summer to continue to drift higher into the fall, into the winter, and then we'll continue to watch the Fed. We'll continue to see how the market acts. Consider this like little strings, and the Fed here controlling it. It's nice. It's just a nice market, but we are getting a little extended, and it's going to be hard to predict where that is. Is it a 2,000 S&P top? It's a big whole number. It's right above us. Very possible we could use that as a pullback area, and I'd be watching it. Everything seems to be coming to that point right now because you want to see a nice little lift here, starting to pull away some of the moving averages. And usually on these topping patterns, or short-term topping patterns, it happens. Usually you take out the highs and then you reverse at one point during the day, and you start to put in some kind of reversals. But you do either gap up or explode higher just to reverse into those into that strength, because at one point it's almost like a capitulation to the upside. It's a lot of buyers saying, all right, I don't want to get left behind. The market's really starting to move now, and that's when you probably end up getting most people trapped. And but you don't even feel that, because this market is, again, one of the most hated bull markets. You don't feel like people are rushing to the banks and starting accounts and trying to get into this market. I don't feel that. I'm in the business. Well, that's what we're going to look for. So I'm going to actually look for a gap up on Monday, and possibly, topping out Tuesday. Not topping out. I want to get semantics there and stuff. But I want to look for maybe the market here, maybe getting up there a little bit higher on Tuesday, and then looking for a reversal and see if we get a little pullback. We are extended here. There's no reason not to look for that pullback. But right now we got great stocks setting up, and let's do a review. Again, like I always say, the first part of this video is usually an outlook for the market and a review of the stocks we've been trading the previous week, and then the second part is the new stocks that we'll be trading this week. Might as well start off with what everyone's been. I got myself all caught up in the beard, B-E-A-R-D. In case you've heard it and you just don't understand it, it's my beard. All right, I'm letting it grow until the best bet fails. And last week's best bet was TJ Maxx. Now, again, I have to go back and just happen to say that working on the HPS methodology and the site, and getting all these and combining all my research and indicators and just kind of weeding out everything except the stocks that fall into this methodology has been paying off so well. And it just takes a lot of patience and discipline to wait for those great setups. And when we see those great setups, it's very obvious. It's very obvious when you see them, because it looks perfect. It feels good. You feel really good about it. It's a nice underlying bullish market here. You have a great name that's pulled back, and it's in a pullback. It's almost like in a double level pullback. It's not just the bigger patterns pulling back off the recent high, but inside that pattern you're pulled back into the lower part of that pattern. So you really have taken a lot of the the weakness away from you. You've actually bought into that weakness, so you take a lot of risk away, and then you're expecting that upside. So that was when I break those down to the different what we call playbook plays, and this one was called a lower channel line bounce. And it's just a real good combination of a recognizable pattern, a lower channel line lining up with an oversold stochastic, and this is off of a 1, 2, 3 pattern. So we're going to take a look at that. That was the big trade of the week. That was the best bet. And if that would have failed within 5 days, and again that goes again for this week's best bet, but if it fails within 5 trading days to hit its profit target, it has to trigger, or I have to take it and announce it's the best bet. If it does not, then I'm going to shave my beard. And this beard's been going on all year, and it's getting pretty hefty here. And I think it has some special powers now. Anyway, it's fun to do. All right, so I'm going to go make a fool of myself at the 4th of July family reunion with my beard, of course. No one's ever seen me with a beard. I even shocked myself, so that should be a big but at least now I have a reason behind it. And I'm sure I'll be sharing next week's best bet with my my cousins too. All right. Well, if you take a look at this, you see this past week's best bet. Now, I can't fit the whole thing on the screen. But you could go up here, take a look at the this perfect 1, 2, 3 pattern. 1, 2, 3 pivots. With that said, you draw a parallel line down here and you trade the price as it comes down to it. So we happened to catch this last week. You see the stochastics here oversold at the same time. Everything coming into our buy zone. We start off Monday by taking the trade because we like it, we love it. And you could take a look at how it performed. Boom, we hit our target today, 54, got to like 54.01, and it closed out as a first successful beard trade. But that's all we wanted. We wanted to get a nice dollar off of it, a little more than $1, and just a textbook HPS type of setup. An alert delivered, the profits delivered, and that's what we look for. So great example and great first beard trade. Not much more to say about that. I would take it every single time. All right, we took KSU. I took the KSU off this week for a nice profit, and it was a nice little trade. We recognized a couple good flags here, a nice uptrending market, and again you could see the oversold stochastic, the flag, the channel within the channel, almost the X marks the spot, but not 100%, but very close to getting down to that combining trend lines. But once you start to realize you're oversold and you're in this flag formation, there's a good shot you're going to actually push higher. So it moved higher, pulled back, and then we got that pop, and we ended up taking profits on it. Just a pretty decent, again, a textbook. Understanding why you get into the trade is gives you a lot of confidence, and confidence helps you stick around for the trade, especially because it's an emotional ride when you're dealing with your money. So you want to understand why you're getting into a trade and where that trade potential has to go, and why you want to get out, and why you want to stay in, and everything else that goes along with it. All right, here you have MDRX, all scripts. I consider this one of the what a great setup this was. We noticed the lane divergence back here, and the lane divergence on a $14, $15 stock is, for me, a nerve-wracking experience, because I really believe strongly in that divergence and that momentum shift, and able to and as using the lane divergence as a leading indicator instead of a lagging indicator. So, because after you see that divergence, you might get a little sideways action, but eventually you get that move back up. And this little pullback here was understandable. We got overbought, then we got oversold, but we had that nice divergence again. We actually held up low, and you could probably draw a little trend line here. And seeing that, and then seeing that next day, that pop, we knew that this thing was going. So off to the races, added to it, and then it was just, we took profits, nice little profit on it, out of it now, but a great trade overall, and it still looks like it has some more upside in it. I mean, at this point right now, because this was an HPS type of setup back here, this is more of an HPS short setup, because you do have the overbought daily. You have, there's no real overhanging trend lines or channel lines, and I'm not calling it a short because the underlying tone of the market is not friendly to shorts right now. So I wouldn't look at shorts like I'm looking at this HPS. I wouldn't consider this an HPS unless it had multiple indicators lining up, and this only has the overbought time frame. So, and that could even continue to be embedded as long as this market is strong. So this continues to look quite good on MDRX, and very possible putting in that pullback here gives us a pullback, and maybe even gives us another opportunity in this. I doubt I would take it though. It's not a setup like it was here. And every so often with the good comes the bad, and I did take a loss in Aetna this week. I did short Aetna. I was just trying to find something to short to kind of keep a little hedge on, and we actually started seeing some weakness with that reversal candle. Then it came back strong, and then it powered higher, and I said, oh, you know what, yesterday we had to get out. So again, I understand the concept. There's nothing really technically saying this should have been short. I think it was just a short. It was going out there. Back here was a real nice negative divergence. You could see that pullback, but nothing really here. Just a strong stock and not a good market to go short in. Let's go to, of course, we did well on the FSLR. This was really nice. We kind of flagged out. This one we paid attention to the 60-minute rotations and got a nice little bounce. Then it failed, and I got back into this because of the 60 minutes. So you have a little clue there for next week. I am back into this one because of the 60-minute time frame. But we've been doing well on FSLR, and it's all based off the channels and the underlying tone here, the pullback, the larger channel, the breakout, and then that pullback and that follow through. So that's where we really got that nice trade off of. And now it's a little pullback here, and it's touch and go. It's negative on the daily, but the 60-minute time frame is important in a market like this, which has been so strong. You don't usually get that full rotation back down. You end up coming back a little and chopping out and continue to move higher. So we're using the 60-minute time frame a little bit more. But overall, looking good. I expect us to make money on FSLR again. And of course, the Lululemon. That was today. We had some good trades on that. And the reason I got out this morning, it gapped up. We got in twice yesterday. We took a scalp on it, which was great. It was the best bet yesterday. And then we had a nice run in it. And then at the end of the day, I saw some strength, and I saw the stochastics were very strong, so I decided to get back into for a swing overnight, expecting over the next couple of days to get some upside. Well, came out with some news overnight, or in the morning that was some bogus news. CEO was talking about the option of taking Lululemon private. Well, anyway. That's all I want. Just give me some kind of BS news and give me a gap up, and we'll sell right into that, not worrying about it. It was the best thing to do. We sold it this morning. It gapped right up against the trend line, and wasn't paying anything. It was an easy profit to take off the table. I wasn't going to bother myself with the fade. I expected maybe the fade. I was going to try to short the pop. I was just happy with the pop, and we took it for a run, and we took that one day the day before. And we took it again, and we had two great trades in that in 2 days, and happy with it. So we'll leave that one on its own. Today we took profits in eBay. And eBay was just I follow eBay a lot, but this was really an X marks the spot trade. It was a underlying support, a channel within a channel, and a larger channel. So we expected to see this break up towards this larger channel and break out of it. And we got that breakout. We took profits today. And it just, again, kind of taking some things off the table into strength. This looks like it had a nice little move. Even though we're embedded, it could definitely move higher. And there's a gap up here, which whenever you see a gap like this on a quality name up at 52.64, there's a good shot that we actually use that as a target. So for anybody out there continue to hold eBay, look at that first level to be a target, at 52.50 level. I was happy with the profits today, and we have other fish to fry now. So that's kind of an update what we've been trading. You have the update on what the market's looking like, and we really focused a lot. I did a couple of good educational videos this week on trading the channel within a channel. Now I'm just going to jump doing the regular HPS watch list now. So some people will lose the video, and I definitely hope you check out Day Trading Radio to get that information on how to get the watch list and everything. All right, so let me start the watch list for this upcoming week right now.